I know there's a lot going on in the world, and it just seems to be getting crazier and crazier and crazier. But I don't know if you saw this, but it looks like an socialist has won the nomination to be the Democratic nominee for mayor in New York City. I find this to be, I don't know, disheartening. We have seen many social experiments with socialism over the years. You don't have to go back very far to see how it ends, and it does not end well. This particular case, they were running on the similar notions: tax the rich, freeze rents, make buses free, and replace cops with social workers. This, he's won the nomination to be the Democratic nominee. New York, I think, is voted blue like forever. So the chance that this individual could be running New York has often been seen, and rightly so, as the capitalist mecca, right? It's where Wall Street is, all of that stuff. And now to think about a socialist, you don't have to play the movie out very far to see how this ends. So what likely happens is, the whole tax the rich goes into effect even more than it is in New York. The rich, who, oh, by the way, are mobile, leave. They flee. They go somewhere else. Then you do things like make buses free, which is really hard to maintain something when it's free. So it falls to nothing. Then you remove cops and replace them with social workers. And, we know how that happens or that works. I don't know how New York is not destroyed within 18 months. It's just a bad idea, right? We don't have to go back very far to see how this ends, but yet sometimes I guess we are just destined to repeat ourselves. So I'm going to have to talk to my daughter and see if I can't get her out of New York. That's for sure. So anyways, that is going on with all the other stuff going on. I just thought it was very odd that New York City elected this individual. All right, let's go on to different news. I don't know if you saw it this morning, but new home sales crashed. New home sales were down 13.7% to only 623,000. For comparison's sake, they were 722,000 last month, so a significant drop. They were also below the estimate. The estimate was 694. So again, new home sales down in a big way. Mortgage applications seem to be kind of in a holding period or holding pattern. To purchase, we're down 0.4% week on week, but up 11. I think we're up like 21 weeks in a row, year on year. So more people are applying. I also suspect more people are being declined. I think that's probably part of the equation, right? An application doesn't equal a yes. If we go back and look at refis were up 3% week on week and up 29% year on year. Again, the longer we keep interest rates about where they are, it's just going to create this force once it unlocks and rates are meaningfully lower. We did get an update from a company called Bumble. Bumble is laying off 30% of their workforce. 30%, that equates to 240 people. So we are talking 240 people. BMO raised their S&P 500 target. We are nearing an all-time high this morning. They've taken their target from 6,500 to 6,700. What else do we got? We got so much stuff bouncing around my data here. Oh, let's shout out folks who joined school in the last 24 hours. We got Ryan and Kareem. Again, folks, you want to be a part of school. It's where wealth builders go to grow, network, and learn. We're well over 400 folks. I'm going to be adding the Las Vegas replay here in the next couple of days as a thank you. Let's talk about the Fed next. We have brewing the biggest divide in the Fed in quite a while. Over the last couple of years, we've talked about this moment a few times, and that I've referenced it as an inflection point, right, where you don't have unanimous decisions. And we've had two people abstained from voting over the last, I think, 4 meetings. But I think the July and perhaps even the September meeting are going to be very interesting to read the Fed minutes when they come out 6 weeks later. Just for example, I got some Fed speak here. Let's do Fed President Williams first. Tariff impact likely to grow stronger in the coming months. Definitely Williams is backing up Powell here. Powell is testifying, basically saying, watch out, folks. Pain is coming the next 2 months. We shall see. More on Powell in a minute. Goolsbee out saying, I don't see stagflation like in the 1970s. I don't know, guys. Did you look at your dot plot? You're talking about low growth, higher inflation, higher unemployment. Not a good recipe. Fed President Collins says Fed policy is in a good place. It is time for patience. Again, backing up Powell. We remember it was Bowman and Waller who were basically saying July rate cuts need to be on the table. Let's do one more before we get to Powell. Schmid talks about economy strength allows for the Fed time to wait and see before rate cuts. The Fed should have a wait and see approach to policy. Now let's get to Powell. Again, he was testifying, lots of data from him. First off, the reason we are not cutting as we expect meaningful increases in inflation this year. This again is the notion that tariffs are inflationary and that the inflation is coming, inflation expectations. So he wants to wait. He doesn't want to be wrong again. When the time is right, expect rate cuts to continue. Basically, I think what Powell is saying to everyone is if we did not have this tariff kerfuffle going on, that we would already be having rate cuts. I think that's what Powell is trying to say. He's trying to say it's Trump's fault. Next, we will be learning as we go through the summer. Folks, that's what you want to hear from the Fed is they're learning. That's very, very interesting. If we get through this period and the outlook is okay, rate cuts. We are open to the idea that tariff inflation will pass through with and be less than we think. Basically, Powell admits they don't know what's coming. They fear that there will be a big jump in inflation, but he's willing to admit they can be wrong. And then finally, rental inflation is now coming down on a regular basis. So again, lots of stuff out there. Fed President Williams, I think I said this, but if I didn't, he says that tariff impact likely to grow stronger in the coming months. On top of that, we've got FedEx, beat top line, bottom line. However, issued weak guidance. In addition, they are looking to save another $1 billion in cost savings. Redfin says that 6% of sellers are at risk of selling at a loss. Again, we've seen parts of the country go down, and if you bought at the peak, there's now 6% of you that are at risk. And then lastly, we got more data. Again, remember we got Case-Shiller yesterday. It was negative for month on month, but up year on year. Look like we're seeing a clear focus on the Northeast for increase. New York had the biggest increase year on year at 7.9%. That's pretty wild. Chicago at 6%. Folks that constantly saying not in my backyard. You guys are absolutely right. The Northeast and I don't know what you call that, the Midwest maybe. Detroit also up 5.5%. The big losers, Tampa. Tampa down negative 2.2%, and Dallas is now down 0.2%. So folks, at the end of the day, let's never forget, one rental at a time is about building wealth. We like to take advantage of buyers' markets, more inventory, more motivated sellers, less competition. Please write disrespectful offers. Please follow up. Please do the work. I want you to get a great deal of the decade, deal of a lifetime. These are the environments that it happens. I'm seeing inside school all the time that people are taking their shots. They're following up. We're hearing about good or great deals all the time. And then lastly, don't forget about our sponsor of the Daily Financial News, Steadily, Landlord Insurance. Only landlords, not owner-occ, not autos, landlord insurance. Somebody I go to for every single one of my properties, and they are saving me money. which I really appreciate. Again, the link will be in the description. Worst case, get a quote. If they can help, great. If they can't, great. No harm in going online and seeing if they can help you. Folks, take care. Have a wonderful day. Like, subscribe, comment, and don't forget to check out the Zuber letter. The Zuber letter is a co-written by myself and the folks at Resi Club. We take one of our videos and we put it into written form. I appreciate Lance and team for helping me do that. Go check it out, zuberletter.com, completely free. If you like to consume your data in different mediums, we are doing our best. zuberletter.com. Later.